Welcome to the channel Financial Education. Today we are going to talk about the oil price trends, recessions, and oil price correlation. Why crude oil should be higher than the price what we see at this point of time, and how this crude oil price will be propped up. Uh, the chart analysis of the dollar index, dollar strength, and the crude oil, and the possible move in the upward direction. How can we take the advantage of that one, going with the trend, and what are the possible risks in the investment or the trading? So let's start with the historical chart. So here you can see that the red color is the US dollar index. For the major currencies, it is made up of like major currencies like euro, dollar, Japanese yen, and Canadian dollar, Australian dollar, and so total six currencies are included for this one at this point of time. Uh, the blue one is the spot crude oil price, and we can see the crude oil price shoots up sometime before the recession starts. In this chart, we can see that the gray gray vertical bars are the recession time period. If we start from the most recent one, recession was in 2007. We can clearly see that in 2007, prior to that, around 2006 time. Let's take a look at that. When exactly? Yes, around like October 2006. That is nothing but a year before the recession. The crude oil price had started moving up. However, it was moving up before that one. That was because of the uh, US invasion of Iraq and instability in the Middle East. That's what had caused the crude oil to price go higher prior to much prior to the recession, and from and there was a recession effect from the 2006, the possible recession effect. If we take a look at um, the recession happened in 2000, where we can clearly see that the crude oil price was moving up, and it rise significantly. Same thing we can see in 1990 and 1980. So it clearly shows that the crude oil price goes much higher prior to the recession, and the last expansion from the 2009 to until now is the economy expansion, and there is a expected recession in the coming year or couple of years. So we expect similar kind of move in the crude oil, and a possible a very strong upward trend in the crude oil. So this is what is the historical data we can take a look at. And now the next point is why crude oil price should be higher than the current price. So current price is around $59 today, if you see, and the reason behind the crude oil price supposed to go up are the oil industry. Now let's take a look at the US oil production. You can see clearly here the US oil production has ballooned up in from the 2010. From the 2010, it is constantly going up, and US is one of the biggest oil producer in the world. Around 15 million barrels per day. It is producing the oil. It is pulling out. So in the oil industry, there are around 51,000 based on the 2019 data. There are around 51,000 employers, and they are employing around 603,000 employee in the oil field, in the oil industry. 271,000 are in the gas industry. Now since there are so many employers and they are involved in this business, and the oil price were quite low in the last couple of years. So we can see like from 2016 they were lower side, and from 2016 until now it's hovering around from like $30 to $60. And the oil cost of one barrel in the US, the production price of one barrel is around $50. So the cost price of the production of the oil in US is much higher. So these employers are struggling with the income and the debt they have. So In the 2019, around $20 billion bankruptcy had been filed by multiple employer. In 2018, it was around 17 billion bankruptcy had been filed. Now, these bankruptcies are not a good sign for the economy, and it's not good for the banks. And this causes, like, when the company closes down filing the bankruptcy, then it increases the unemployment. So unemployment is definitely not good for the economy. And at the same time, this is the final year of the presidency of the Donald Trump, uh, and of course, he's always bragging about historical low unemployment. And uh, and and this unemployment, if the oil industries go bankrupt, uh, then it increases the unemployment, and this is completely reverse of what he's looking for. So definitely he will work hard to avoid that unemployment in the oil industry. Now, the how this oil price will be propped up, how this oil price will be manipulated, that is also quite important to understand. Like, pretty much every prior to the every recession, the you can see that the US dollar strength has gone down in most cases. Of course, there are certain exceptions too, but it will become weak, and that will cause the price to go up. And this weakening the dollar, which has been called multiple times by the president, to, like, reduce the interest rate to the zero, and weaken the dollar, so that the corporate can benefit out of that one. And uh, at the same time, the OPEC member, so weakening dollar has a reverse effect on the oil price. So oil price goes up as dollar weakens. Uh, and 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 there is another important factor that will play the crude oil price, that will help to prop up the crude oil price, is the OPEC members. So OPEC members, they are the countries, they are producing the oil, especially the Middle East countries. And and they take orders from the US, of course. And because of that one, if the whole game plan is to increase the oil price, then OPEC will also announce cutting the oil production, and that will push the oil price higher. Now, this will definitely help the corporates, the big corporates, and the dollar, since the dollar and the since the crude oil price is the lifeblood of the dollar. However, over here, the common people will have the negative impact, because the buying power of the dollar will go down, and that will impact their savings and their expenditures. It Increasing of the crude oil price also increases the inflation, because crude oil affects in the transportation, and when transportation becomes expensive, then everything becomes expensive. So that will increase the inflation significantly. So common people are beaten from two sides. One is the inflation because of this crude oil price, and the second one is the dollar buying power has gone down. So they are on the losing end. Now, so this is what we talk about, the how it can be propped up. Another, you can see, like, there are conflicts going on in the Middle East. And in the Middle East, there are multiple, like, recently there was an incident in the Iraq, and that caused the crude price to go up. So this kind of incidents also many times, kind of planned, so that it can be propped up. So these are the events. Many of the events are designed, and they are, like, designed in a such a way that it has a right impact on certain commodities. Now, let's take a look at uh, let's do the chart analysis for the dollar. So we can see that this is the dollar index, dollar currency index. Here, this is a weekly chart, and we can see clearly the MACD and RSI and stochastic RSI. Um, these are the indicators over here. And I believe you might be knowing like how this indicator work and what kind of formulas they have. uh, Maybe like I can take a I can make another videos on those various indicators. Let me know in the comments if you really want to understand them. uh, so here we can see that the dollar index is getting strengthened from 89 or 90 we can say, and then it has gone all the way to the like 100 and then came a little bit down. Now the dollar index has been rising up, whereas if we see over here the MACD, clearly we can see it's a divergence. The dollar index is going up, but this moving averages, they are going in the so here it is making higher highs, and over here in the MACD it makes lower lows, which is the divergence we can clearly see. And when the divergence happens, there is very high possibility that the price will move in this indicator's direction. Same way we can see the RSI stochastic, the RSI. In the RSI we can see the lower lows, and over here it's like completely opposite direction it is taking place. So this is also we can see the direction, and same thing we can see pretty much in the stochastic as well. So all these indicators are showing the same direction, which there is quite high possibility that this dollar is like going to go down soon enough. There might be moving up and down a little bit, but effectively it seems it is heading towards the downward direction. Now, these are the weekly charts, so it takes long time to build that trend. If so, here we can see that it had started from February 2018, so it's like almost 2 years it has taken to come down here, and the divergence is continuously building up. So possible movement will start if this might go up, I guess, up max to the 99, and then it should start falling down. That will be the max level, I believe. It should not go up that way, that direction, but even if it goes, if touches that, and it will head towards it should head towards the downward direction. So this was about the divergence, which is quite important to understand the possible weakness in the possible weakness in the dollar, and how Fed might help in weakening the dollar compared to the other currencies. Now, considering all this aspect, we can see possibly there is potential upward move in the US oil, like in the crude oil price, uh, and that crude oil price. So at this point of time, we can see the stock market is ballooning. Every stock is going up, and why they are going up, no one knows that. They are going up because they are going up. That's it. And even the company's results, corporate results, are not good. Even if they are like missing the earnings, stock is little bit comes down and then it starts moving up. So this is completely played market. This is not the real market, of course. So and at the same time, the Middle East instability and possible black swan event, you might be aware of, like black swan event, something like an unexpected event which brings the stock market way down than wherever it is. Like for example, 9/11 was the black swan event. So or Lehman Brothers was one of the black swan events. Some of the black swan events, like most actually, the black swan events are black swan events for the common people, but some of people are always like aware of those events, so they always position. Um, but that is normally an unexpected event. So in that case, the stock market can go down. But consider the black swan events are like more possibilities are in the instability in the Middle East, which can cause which has a higher possibility due to recent conflicts. So if that happens, then it can bring the stock market possibly down, but it will bring the crude price up. So the risk reward at this point of time to put to get into to take the position in the crude is reward seems to be a bit higher than the risk. This is what is my understanding. Of course, this is not a financial advice, and based on this. You should not be taking any position unless you take advice from your financial advisor, or you take your own decision on that one. So this is what is about the oil price analysis at this point of time. In the previous videos, we talk about yeah. Before I move to the other part, today there was an event. like you can see this headings like oil jumps after unrest hit key OPEC producer Iraq and Libya. So in Libya there are like some of the events going on in the Iraq, and that pulled the that made this US the oil price to open at the high, but slowly it is pulling it back. However, the possibility is like it is in the upward direction from here. So that's the oil price today. There are like investment vehicle which we have talked in the previous videos, but I would like to quickly just go over. UWT is one of the ETF. UWT is one of the ETF which can be used to invest into the market if someone does not have the commodity trading account. This is the this is for the this is bull UWT ETF, and there is bear, which is DWT. So DWT will move up when the oil price goes down, whereas UWT will go up when oil price goes up. So you always have to be careful on this one. DWT also could be a good instrument when there is when the oil price has gone way high and it gets into the downtrend. But at this point of time, it may not be a good idea to trade the DWT, as it is as the chances are going chances of USOIL going up are much higher than the going down, considering all the aspect what we discuss. So we should take always position in one direction rather than playing both the direction. That can be sometimes dangerous and high risk. All right, I think that's it for the this video. It's just a little bit longer, but I'm planning to make more videos on the silver and gold price and some of the specific stocks, so and other precious metals too. So subscribe the channel to have the latest update without missing them. Thank you.